Good morning and welcome to the Shanta Gold Limited investor presentation. Throughout this recorded presentation, investors will be in listen-only mode. Questions are encouraged and can be submitted at any time via the Q&A tab situated on the right-hand corner of your screen. Simply type in your questions and press send. The company may not be in a position to answer every question it receives during the meeting itself. However, the company will review all questions submitted today and publish responses where it is appropriate to do so. Before we begin, I'd like to submit the following poll. I'd now like to hand you over to Eric Zorin, CEO. Good morning, sir.
Yeah, good morning, and thanks everyone for joining me this morning. We've had a bit of news out that I'll take you through and update you on the company and some of the plans we have for myself and for what that means for the company. And as I've done in the past, and I'll do again, I will answer all questions provided. We won't filter them. And we'll give everyone a fair shot at getting their questions and what's on their mind off their mind. So there we go. I think there might be someone just on the line as well. If you could just mute, I'm not sure who that is. I just hear a bit of background noise. That's great. So thank you for that. And what I'll do is I'll open up the slides. I'll take you through them. I'll turn off my camera so you can have the full and undivided attention of the actual slideshow. And then during the Q&A, I'll pop my image back on the screen and we can go from there. So let's start now. And here we are. Good morning, and again, thank you for joining. The overall message today I want to get through to you is that we've had a really strong start to 2023. We now have our second mine in production, Singita, that poured first gold on March 30th. And as a result, Shanta is Africa's newest 100,000 ounce gold producer. First time ever in Shanta's history. We have nearly 4 million ounces of gold resources in the ground. We have 3 projects. We're in 2 countries. We generate today's gold price about $200 million of revenue, $60 million of EBITDA. And we are a real cash flowing, dividend paying gold producer. So that's all in one breath. And hopefully you can see that we're a real company. Now, with that, you're probably wondering why I announced this morning that I'm stepping down as CEO. Well, the reality is that after 6 years with the company, 10 years in Tanzania, I think it's the right time for myself to look to do other things. I'm only 42 years old, and I still have a long career ahead of me. And I think personally delivering Singita on time and on budget as our second producing gold mine leaves Shanta in absolutely excellent condition and ripe for new leadership. And that new leadership will undoubtedly come up with some great ideas for extending my lives in Tanzania and also for unlocking West Kenya. And I have some updates on that as well. And so it's just the right time for me, frankly. I've been back and forth to Tanzania a lot over the last 10 years, and it's time for me to move on to do other things. And I leave Shanta in excellent condition. The board has been unequivocal in their support of me, and I have only the nicest things to say about Shanta, the board, the people, and the assets. And so Shanta is in great shape, and you can see here on this slide, we have a huge wealth of skills and experience across the company, and Shanta is in excellent condition. Just to remind you, we are in East Africa. We have well over $500 million of NPV in terms of our portfolio against a market cap of 170 million. We're now producing gold from 2 mines with output of 100,000 ounces of gold production per year. Our balance sheet is in great nick. At this gold price, that debt will literally melt away. I mean, I can see what's in the gold room and what we're producing. I think in the next couple of days, we'll have I think it's over a $10 or $11 million gold shipment, which is shipments, which are, you do a couple of those and all of a sudden that gross debt or that net debt vanishes very quickly. And that's the function of having a lot of great gold production. So things are looking up for Shanta. Top shareholders here own 40 some odd % of the company. Directors and insiders own 7. We're all aligned. The shareholders have been extremely supportive and been very good to Shanta over the years. and we are very thankful for their support. On slide 3 here, you can see I've tried to make it as simple as possible, but you can see here, New Luica has been very good to us over the years, and this year is no exception. 66 to 72,000 ounces of gold. You add in Singita, we then leapfrog many of our competitors, and all of a sudden we're up at 100,000 ounces. And then I always get the question, great, what's next? It's really simple. New Luica will extend the mine life. Singita will extend and expand. West Kenya will build. It's as simple as that. And for those of you who kind of didn't believe me 6 years ago, here we are. Share price has done, we've delivered 340% returns, and West Kenya I'm sure will double Shanta, if not do better than that. And there's lots of potential there. So the story is simple. We've gone from 1 asset to 2. We've got to 100,000 ounces. West Kenya will take us to 200,000 plus, and New Luica and Singita will continue to produce gold because we'll add more reserves there. Simple as that. Overall, the company has 3.7 million ounces of gold across 3 assets. 2 of those are producing. The one that isn't has the best grades. Indicated here is 722,000 ounces at 11.5 grams per ton. Can't find that anywhere in the junior space, let alone the mid tiers of the seniors. And so we're really blessed with asset quality and operational reliability. What did we do in the first quarter? Well, we produced gold. That's what we do best. We produced 15,300 ounces, a little bit less than what we hope to do because of excessive rains and equipment availability in February. But the good news is that January and March were both above budget. February wasn't. And overall, we produced 15,300, and we're on track for 66 to 72 for the year at New Luica. Liquidity is good. We have cash on the balance sheet. We have access to undrawn working capital facilities, and we had Doré gold. So that's all in good shape. Safety was outstanding. We did not have a single recordable injury across our 2 assets, and obviously no LTIs. At West Kenya, we're long overdue an update there, and literally as we speak, there's a workshop underway for the week in Kenya, and we're kind of articulating plans on how we get to first gold production, how we get through permitting. So lots of excitement there. Here's a picture of our New Luica gold mine. This is an absolutely lovely place in southwestern Tanzania. We're going to have some shareholders and analysts down there next week, looking at that, and then suspect they'll have their reports out sometime in May in terms of what they saw and what they think. I don't think we've ever had a bad visit in my 6 years. It's partly because of the area, the people. It's kind of a nice warm place. Just not just kind of weather, but there's a great culture on site, and everyone comes back feeling better than just looking at it on a PowerPoint slide. So we'll have a good update out of there next week. In terms of what did we do in the first quarter, some more granularity on the operations. We started with the mining. We had physicals of roughly about 230,000 tons mined, which was a great outcome for us. That was on track and with what we were expecting. So pleased with that. Overall, 166,000 from the undergrounds at 3.3 grams, and the balance from the open pits at 1.44. So basically completely in line with what we did in Q4 in terms of open pit mining. And then from the underground, overall on track with plan there. Other than February, where we had to mine from areas we didn't plan for because of what's called mine sequencing. Production in the plant, we had 217,500 tons, which is exactly on track for 870 overall for the year. That's our budgeted number, 870,000 tons. So we did slightly better than that last year. and we're exactly on track for that after Q1. We reiterated guidance of 66 to 72,000 ounces for the year. April is off to a great start. Should produce about 6,000 ounces in April. Hopefully, we see that in May and June, and Q2 is looking promising. Now, overall, what is it? We'll talk a bit about this in a few weeks when we put out our 5-year plan. But what does Shanta 2.0 look like? What's our new identity? Well, 100,000 ounces. If you break it into 12 months, it's 8,400 ounces a month. And then if you then break that into 2 projects, we talk about 6,000 ounces a year 6,000 ounces a month at New Luica. So the balance would then be Singita. And we haven't said what Singita will produce. We've said it might produce 32,000 ounces a year. You can see so far 2,200 ounces in 22 days this month on better grades. But you kind of get the picture here that Shanta of old is not Shanta of new. This month will probably produce 9,000 ounces between the 2 assets. That's the best production Shanta's ever had in its history as a company. Is literally this month, April 2023, and at near all-time high gold prices. So what a great time to be opening up a new mine. Couldn't think of a better moment. In terms of, I have to keep showing this slide because this is the crux of it all. How do we replace? What's our track record of extending mine life at New Luica? It's good. 4 years in a row now we've mined and we've replaced, and I'm sure we'll be doing that again this year because we'll be drilling in June, July at Luica Deep, and there's all sorts of great targets there to extend, which is open at depth. So lots to look forward to there. Mine number 2, Singita, up and running in producing gold. I wouldn't say in commercial production yet because we haven't declared it. But what you can see here is it's all brand new equipment. We spent $40 million on time and on budget to deliver first gold pour last month. And now Shanta is blessed with 2 assets, diversification of revenue and income, and lots of I'd call operational and soft synergies of operating 2 mines in a single country. So we're pleased with that. Overall, we had, as I said, some of the catalysts to come here. We had first gold pour right in the middle of the slide here, Q1 2023, on time, on budget, and we'll declare commercial production and our kind of 5-year plan later this quarter. So wouldn't say there's anything to be kind of unexpected with that. You can see here, this is literally a picture from the Singita Gold Room. I promise you, this wasn't taken off Google Images. This is straight from the Singita site, where we've now produced 2,200 ounces for the first couple weeks of the month. So on track here, all looking pretty good at Singita. A few more pictures of what we've been up to on site, some of the infrastructure, the equipment. You can see here the TSF is now fully lined and going through the final permitting for the long-term permit. And then finally, I would be leaving the story short if I didn't talk about on slide 15 the reserve life potential at Singita. Now, if you go back to remember that earlier slide, I talked about what's so special about Shanta. We've gone to 100,000 ounces. Then what's next? New Luica is mine life extension. Singita is mine life extension and expansion. West Kenya is production. It's really simple. The strategy is that simple, and that's our goal. Now, if we do all those things, our share price will be wildly higher than where it is today. If we do one of those, our share price will be higher. If we do 2, it'll be better. This is all about delivering value for shareholders, and Singita is all about reserve life extension and mine life expansion. This is a greenstone deposit, very prolific, part of the southern tip of the Lake Victoria goldfield. 90% of our reserves are only within 120 meters of surface, and I think we only have 27% of reserves. Of our resources are in reserve, so there's lots of potential for resource conversion. Now on to West Kenya, and just a couple of notes on that. Just to recap, we have now 1.76 million ounces of resources at 5.55 grams per ton overall. And this is a project, believe it or not, we bought for $14 million 2.5 years ago. You know, when nobody wanted to touch gold, everyone was busy looking at tech, and we were in the midst of a pandemic. We were able to pry this one out of Barrick, and we think this will be one of the great stories overall once this goes into production. To think that we acquired it for only $14 million, so very pleased with that. We now have two distinct mining camps at West Kenya, so Kakamega and Rumula. So whereas when we acquired it, there was only one. When we acquired it, it was all inferred, and today we have better part of about 1.2 million ounces of indicated resource, including this amazing pocket here of 720,000 ounces at 11.5 grams per ton. So, you know, very, very rich, high grade, which means low cost, and certainly attractive. We're getting all sorts of inbounds asking what's happening here at West Kenya. So a bit on Kakamega. This is camp number 1 of 2. And so during the quarter, we upgraded resources at Kakamega and delivered material growth and quality. Just to remind you, at Kakamega, we have oxides of just over 100,000 ounces at 10.4 grams per ton at Bushangala and Isulu. And then we obviously have the high-grade sections below that. And so you can see here on the right-hand slide, Isulu, you know, for all intents and purposes, goes right down at depth. It all looks pretty attractive. Then you have Rumula, second camp at the West Kenya project. Now we've upgraded the resource in Q1 at Rumula. Most of it is now in the indicated category. And just to remind you, Rumula, we only declared a maiden resource there 12 months ago. So, you know, from nothing to 500,000 ounces of indicated in 12 months and pretty limited drilling shows you really just how intact this deposit is and how interesting it is. And so when we run our numbers, we see resource grade in terms of the actual mining, when we apply our own mining methods, you know, up around 3.5 grams per ton. So it gets a lot more interesting when you actually put a mine envelope on this. And the bigger story with Rumula is that it's one of 6 individual targets within 5 kilometers. And so this is really part of a bigger camp, and this would be kind of chapter 1 of the Rumula camp. So what's next? Well, as always, another busy 3 months to come. We'll declare commercial production, set out our guidance for the year at Singita and the 5-year plan. And then we're going to get really busy here on the exploration potential. West Kenya drilling starts June 1st. New Luika drilling is June, July. That's the reserve targets. I'd like to see Singita drilling as well. It doesn't take much to get a rig or two at Singita targeting reserve extension. And then we have our Q2 report in July. And when you do the numbers for Q2, you could very well see 18,000 ounces at New Luika, another kind of 8,000 ounces at Singita, and you know, all of a sudden group production starts to look like it's 27,000 ounces in a single quarter, which is, you know, it's absolutely a game changer for Shanta when you compare it to what we were, say, 12 months ago. So lots to look forward to. Q2, I'm sure, will be by far the best quarterly production out there yet for Shanta, and it's certainly very rewarding given all the hard work we've put in over the years. With that, I'll open up to some Q&A, but I'll maybe hand back to the operator first and just take us through the next steps.
Eric, thank you very much for your presentation this morning. Ladies and gentlemen, please do continue to submit your questions just by using the Q&A tab situated on the top right-hand corner of your screen. Just while the company take a few moments to review those questions submitted today, I'd like to remind you that a recording of this presentation, along with a copy of the slides and the published Q&A, can be accessed via your investor dashboard. Eric, as you can see, we have received a number of questions throughout today's presentation, and thank you to all investors for submitting their questions. Could I please ask you to read out the questions and give responses where appropriate to do so, and I'll pick up from you at the end.
Thank you. Tom M has asked, how's the relationship with the government? The relationship's great. The reality is that when communities benefit, you employ 99% of your workforce through local employment. You employ the communities, you pay taxes on time, you commit to community projects, and you're just frankly transparent and honest with the government. They appreciate that. And from that perspective, that doesn't come overnight. It takes a long time to build the trust with your host government, and we continue to do that day in and day out. And we have a very productive relationship with the Tanzanian government, so we're thankful for that, and we appreciate their commitment. Malcolm D has stated, "Thank you for all your efforts. Shanta was in bad shape when you took over, and you nursed it through some tough years, paying off the debt." Malcolm, I appreciate your comments. I concur. I agree with that, and we certainly are enjoying now the fruits of the hard work. You have to remember, again, 6 years ago, the gold price was half of what it was today, or maybe a bit more than that. And here we are, really benefiting from higher gold prices. Obviously, costs have come up. It's inflation globally, but my view, generally speaking, with junior mining companies is they should have a very conservative approach to financing their balance sheets. All often do not. Debt becomes a problem when you have a single asset, single country operator. And so that's something we've been very careful to manage. And our priority is obviously mine life extension, drilling, but it's also to put our balance sheet back into very strong shape. And so Mikael and I, we talk about that all the time. And cash accumulation, repaying the working capital facility, those are all key priorities for us. Chris T asks, how pleased are you with the progress of West Kenya? How big an opportunity do you see it for the company? I mean, West Kenya is, so half of our resources are at West Kenya. That's the starting point. The grades are better than anywhere we have. It's a greenstone deposit in the Lake Victoria Gold District, where you have tier 1 gold mines like Bulyanhulu, North Mara, Geita. These are all in the same address. I hate to use that word, but it's all the same region. And then you have a team which has been absolutely starved of capital. Yuri and the team, Chris, Pippa, Ben. And these guys continue to deliver results. Despite us saying, you're limited on capital. And so finally, we're taking significant steps forward here to showcase how West Kenya will become a mine. It's really starting to look like Rumula is going to be the starting point, just given in terms of the risk reward, the amount of capital. But we're also planning to go through the permitting process on both, and to keep our options open, because you just never know with the gold price, and with a project as great as the West Kenya project, you just don't want to ignore it. So West Kenya is going to be great for Shanta. It already is, and the reality is the opportunity here, right as we sit today, is that I think for the most part, investors don't give it much respect, and I think that's the opportunity. Barry has asked, the VAT refund of 20 million is taking a long time. Will it ever be returned? Why isn't the government playing ball? We concur. It's taken a long time, and we would like it resolved. These things are complicated, partly because it A, sets precedent in Tanzania, and B, it certainly means that others with much larger VAT receivables will also be trying to use our hard work to get theirs returned. So I still believe that it will come back, and I believe that because the government is engaging on the discussion. It's actively being talked about, and there are teams looking for solutions, looking to control the narrative on how they return it. And if that wasn't the case, I'd be a lot more pessimistic on it. But if you have a willing government talking about doing something, as we all know, governments move at their own pace, and we just have to be patient. So let's be patient. Michael B has said, just bear with me. I think I've lost that one. Oh, here it is. Michael B said, "Great work with Shanta. Why are you leaving now when Shanta's onto great things?" I generally believe that a CEO tenure should be 5 years, and I think there's a lot of studies that show what happens after that. There's inertia and all those things. You have to keep reinventing the company, and you can stay longer than 5 years. I mean, great CEOs do that, but I also think it has to come with reinvention, and reinvention might be through M&A, it might be through West Kenya, but I think at the same time as well, at the start of the call, Shanta is in absolutely fantastic shape. It's never been as good. As I said, April 2023 will be a record production month, and we've delivered Singida on time and budget, and it's time to pass that leadership responsibility on to the next, to the successor, whoever that may be, and support them as much as we can to make Shanta even better. An individual here, KK, has asked, is Shanta's SG&A high compared to close competitors? We are always cost conscious. We don't have a London office. We're decentralized, so all of our operations, all of our people are at the operations, bar myself, and our CFO, who's committed to spend the majority of his time in country. And I would argue we don't have a high SG&A compared to our competitors, and frankly, it's because we're just so lean at the corporate level. Peter D has asked, do you have concerns that grades can be maintained at New Luika? It's interesting. So I don't have concerns, frankly, because we've seen now we're into the Luika deposit at the New Luika gold mine, which has been steady. It's large, wide, medium grade stopes, and we're convinced that will continue based on all the infill drilling we've done. And then we obviously blend the grades from Luika with grades from or material from other deposits around New Luika. So we're confident. When we set out a mine plan on reserves based, we update it every 3 months, and we've had good reconciliation to what we expected. So we're pleased with and confident. Omar has asked, can you please comment on discussions with the government regarding new regulations and the impact on Shanta? We haven't had any discussions so far on that. We will provide updates in due course. I would remind everyone that Shanta is in a unique situation in that we've never had a mine development agreement like our bigger peers, Barrick and AngloGold, and we have invested literally hundreds of millions of dollars of capital into Tanzania. So we are a very good corporate citizen. We pay our taxes, a lot of them. We support the community's employment, and we believe reasonable discussions can take place. Peter D has asked, can you say something about the debt repayment schedule? Sure, why not? First debt repayment is due at the end of September. It's a quarterly repay over 3 years of $1.67 million per quarter. And when you compare that to, say, quarterly EBITDA of 15 million, we're very comfortable that the debt repayment schedule will be met, and if not, accelerated. Peter's then asked, what criteria are you looking for before declaring commercial production at Singida? Good question. We do have we prepared a memo on this about a month ago and discussed it with our audit team and the operators. There's really 3 or 4 key criteria. One is consistent and steady throughput of the processing plant. So we're targeting 1,000 tons per day. And so you typically want to do that at I think availability of somewhere around 95% of the time consistently. you want to have all of your key equipment in place. You have to have all of your key recruitment completed. We also want to satisfy ourselves that we can actually ship gold from Singida, so that should happen later this week. And then we ultimately want to make sure we have all of our permits in place. And I can't comment on the specifics of these things, but this is the type of criteria that we're targeting. And when we've met those and we're satisfied that we are in steady state, we'll declare commercial production. Bobby's asked, would you look at acquisitions beyond East Africa? The simple answer is yes. We are opportunistic. We look at the actual asset and the opportunity as opposed to the jurisdiction. That being said, I've historically have worked across time zones, and I think it is certainly a hindrance for a management team to be too scattered and not focused. I think Africa has all sorts of opportunities. It certainly presents a lot of challenges, but with those challenges come certain rewards. And I think looking beyond East Africa is certainly in the cards. There's nothing live now, but we are opportunistic. Edmund's asked, can you expand on your succession plans? I can, only to say that we're here to support I'm here to support the board, the stakeholders, the management team, and the employees in my full capacity through to the end of September. There are a number of excellent candidates I'm sure we will be able to uncover and discuss, and look forward to welcoming the successful candidate in due course. So that succession program is just at the outset now, just starting off, and we'll provide updates in due course. E&D's asked, what kind of workshop does that entail? What sort of companies will be attending? It is an internal workshop. We have some individuals who are external to Shanta, but internal to us as consultants who are helping. And we've done a lot of work, Ben Cottrell and team, on establishing what the parameters would be for getting to a producing mine in Tanzania and in Kenya. And there's been a lot of bottom-up analysis in terms of mine planning, costings over the last, largely over the last 9 months around that. And so it's really fine-tuning that and coming out with something that we believe in, we back in terms of a plan, and then strategically looking at how do we make that happen in the best reward for Shanta shareholders. And so he certainly wouldn't want to think outside the box in terms of how do we bring West Kenya to life. So that's all I can really say for now. Eric M has said, has there been a falling out with the board since the takeover attempt? Is it difficult to reconcile? And the CEO saying, I'm not happy. Absolutely not. I mean, I couldn't say more nice things about the board. They've been hugely supportive of me personally, and the strategies I've been put in place over the last 6 years. And I've only the highest regard for Shanta, its stakeholders, the people, the culture, what we've been able to create. I really do believe that succession is a natural path, and that's the way you keep companies renewed, and that's the way that you get the most out of people and companies, is when you renew. And certainly Shanta is at a very natural point now with 2 producing mines and West Kenya in the process of being unlocked. I mean, it is so obvious to me that this is the right moment. And I think it takes, I think leadership comes with a lot of responsibility to be able to know when that right moment is, and to be honest with yourself. And so this is a great moment for Shanta, and it's a very pleasing moment for myself as well. Sam M has said, thanks for your work as CEO. How important is the role of the CEO in negotiating the VAT settlement with the government? I would really put it down to, there's no direct link to CEO government. The reality is that I'm one of many employees at Shanta, and my role is to set the culture and the strategy, and then for our team to be empowered to put it in place. And so when you talk about VAT settlement, the strategy here really for settling VAT is to be the best corporate citizen in Tanzania, to be transparent, to pay your taxes, to employ locally, to do all the right things around local content. And with that, the government should then return what we believe is rightfully ours in terms of VAT. Now, me intervening in that process, I would say, has very little bearing. In fact, I think the reality is the most important part is setting up the right ingredients, the culture, and the strategy to enable those discussions to take place. Michael B has asked, do you have a good relationship with the government of Kenya? Yes, we do. We're a very small operator in Kenya. We have, I think it's 35 employees. And obviously we're a small outfit. So it's still early days with the government there. Camille has said, hi, Eric, realize the gold price for Q1 is after or before hedging. How much of the impact of hedging for Q1 is coming into Q2? I'll double check, but I believe it's net of the hedging for the Q1 gold price. Remember, it's very small in terms of our exposure to hedging. We have 1,000 ounces remaining in April at 1756. So that's about a give or take $250,000 cost. That gave us protection on the gold price for Singida. And then the balance is we have I think it's another 6,000 ounces with a collar at 1950, which is basically where it is today. So, call it $30, it's $180,000. So total loss here would be 400,000 over the next 3 months, and that's compared to revenue of roughly about 50 or 60 million. So we're in good shape. A couple more questions here. Camille, do you intend to clear the short-term loan before leaving the company? The working capital facility will be repaid in due course over time. It's a 180-day revolving facility. So we repaid, and Mikael and I have discussed that about de-gearing, because we think that's really important. And then the senior debt facility is just it's amortizing over 3 years. Rizwan has said, why was this announcement not made after a successor had been found? Is there an internal candidate? The reality is that it wasn't made after a successor had been found. It was made before. And part of that is making sure that we cast the net wide to find the right person, because the right person, if it's in a private process, might not be identified. And so we can see here now, we've made it clear that we are looking for a successor publicly. I think transparency is really important, and it's important that you can all see that there's a clear process and that there's a smooth transition period as well. So that's good. Do we have an internal candidate? There's always great candidates internally. I think the skill set's probably a little bit different to what we would say we have internally. This is in terms of public markets skill set. I don't think we have any of those skills internally. Certainly could train, and all cards are on deck. KK has asked, thanks, Eric. All the best. Smooth transition personally with your next role. Thank you very much. It's much appreciated. Sam has said, in Q2 onwards, are you selling all gold at market or some still at hedges? We will clear our hedge book in due course, and we won't hedge again. Edmonds, I'm just running out of time here. Edmonds asked, thanks, grateful to you and your colleagues for your hard work. Please keep going and focus on community development. Absolutely. And finally, this will be my last question, which is in the queue. Barry said, is Canaccord still selling? Is the La Mancha Fund now buying? I have absolutely no idea. I do not get involved with any of that. So that's it. Oh, sorry. KK's asked one more. Last one. There are no others in the queue. Is it possible to make sure new management are better aligned to shareholder performance as part of their remuneration? I don't quite understand that question, because for me, half of my discretionary pay is in shares, and the other half is in cash to pay for the taxes on those shares. I've owned shares for 6 years. It's a significant part of my own personal holdings, and I think I'm very aligned to the performance of Shanta. And KK said, "Thanks, Eric. Take care!" Exclamation mark. I appreciate that. We're all in this together, and thank you very much, everyone, for your support. So we'll leave it at that. Thank you for hosting, and over to you, operator.
Eric, thank you. And I think you've addressed all those questions you can from investors. And of course, the company will review all questions submitted today, and we'll publish those responses on the Investor Meet Company platform. Could I please ask investors not to close this session, as you'll now be automatically redirected to provide your feedback in order that the management team can better understand your views and expectations. This will only take a few moments to complete, and I'm sure will be greatly valued by the company. On behalf of the management team of Shanta Gold Limited, we'd like to thank you for attending today's presentation. Good morning to you all.